Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the real estate entrepreneur and friend of the channel, Omar. How you doing, buddy?
Good. What's up, Michael? What's up, everybody?
Hey, Omar. It is now April 19th when this video is posted, and tax day just went by. So
Yep.
I don't know about you, but I had to cut a six-figure check to the IRS. Made some money flipping properties last year and in real estate, and I did not have enough depreciation. So I thought maybe you and I should talk about depreciation, what it is. We should talk about bonus depreciation, accelerated depreciation, why it is something that you used to write off a bunch of stuff. So yeah, it's after tax day. Thank God that day's over.
Right. But obviously for us that we do so much business and everything else, and we want to extend the life of our capital.
Yeah.
I filed an extension. So I do that every year. It costs me some money. It's fine. But what it does do, the money that I do spend on that penalty or on the extension fee, I get to use that money again. So in essence, I use the IRS money for another 6 months, create some more income, create some more profit, and then I use their money to pay them back.
That's
so
nice.
At least that's what I'm trying to do. And the depreciation aspect of it, man, I mean, you and I talked about this, we had our call with the cost segregation gentleman, and it's been the game changer. Honestly, it's saved thousands and thousands of dollars in payments to the IRS. So
yeah, so let's break down what depreciation is, because let me be very clear. Depreciation is what the big boys play with. Bonus depreciation, accelerated depreciation. These are all things that we have at our disposal, and they were at our disposal last year. They're at our disposal this year as well. They were part of the America's Job Act, I believe. And I came out, I think about 3 months ago, once I realized just how big a check I had to write this year, saying that I am not selling anything this year, and I won't sell a damn thing. I am not flipping another property. I need more depreciation. I need more write-offs. I need more bonus depreciation. So let's break down what the three are. And again, folks, I have an accountant named Bob Langworthy that I've had on the channel. You can research him. He talks about this as well. So we're going to talk about these three levels as business owners, not as CPAs. So go get your own advice, validate them. Let's talk about depreciation first. Depreciation is something that I've been using for 20 some odd years, ever since I had my first rental. In the accounting world, it's called a non-cash expense. If you were to summarize what you think depreciation is how would you kind of outline or describe depreciation?
Well, for me, I mean, obviously I didn't really know much about it until I started buying property.
Yeah, me neither.
And then having the single family residences depreciated over 27 and a half years. And for everybody that's listening, if you don't know what that is, you take $100,000 purchase price, 20K, which is the land value, because you can't depreciate land. Then you have $80,000 left over, divide that by 27 and a half years. Exactly. And that gives you the amount that you're able to write off on an annual basis for that one property. Yeah. And I didn't know about it. And it's like, oh, okay. It's not much, right? Because it's divided into 27 and a half. But at the end of it, you're like, oh, okay, this is great. But then we, came into contact with a gentleman and cost segregation. I remember when I called you that one morning.
Yeah, I mean, you were vibrating through the phone.
Oh yeah, I was like, Michael's got to hear this. Michael's got to hear this.
Yeah.
And go ahead. Sorry.
Yeah. So depreciation has been around for a long time. It is legal by the IRS. In fact, the IRS mandates that you take it if you own rental properties, because if you don't, they're going to assume you took it. So your example is dead on, right? Purchase price 100, land value don't depreciate. Residential property 27 and a half. Commercial, I think 33 or so. Anyways, I don't know. Talk to your accountant.
I think it's 39
or 39.
No,
yeah, 30.
39.
Whatever.
Yeah,
whatever it is. A different.
We just talked about it.
Yeah. But the beauty is, I didn't know about it either, right? I buy a house in 06 or 02, 03, 04, and I see this line, and I'm like, what is that? So my accountant tells me what it is. For me, because I have a job, I can't I actually don't get to use it. I have what's called a carry forward loss,
Right.
basically where I actually had income, but because of depreciation, it looks like I didn't, which was cool.
Mhm.
But for me, I couldn't go below zero. So I have carry forwards. All right. When I left the workforce at 45, I had $1 million in carry forward loss, which I have since used, but I didn't.
That's freaking dope.
Yeah. So depreciation is there. It's awesome. But then there's this thing called accelerated depreciation or bonus depreciation. Um, bonus depreciation, accelerated depreciation, or I'm going to start with cost segregation first. So we
Cost seg, because that is what it is. Good.
yeah, cost seg first. So as Omar correctly said, right, you divide it by 27 and a half years. But if you think about a house, it doesn't all depreciate at the same rate, right?
Correct.
Roofs are different than plumbing, than electrical, than flooring, than this, than that, than others. For a long time, it was only the Richie Rich of rich did cost segregation, right? It was the 100-unit apartment, the 1,000-unit this, the that, the other, because it was an engineering study. You had to come in and legitimize what part of the building depreciated faster. And I think it's 3, 5, and 15 years, something like that.
Is it 3, 5, or was it
3, 7,
5, 7, 15?
something like that? Yeah. So again, we're talking about it as operators. Talk to your CPA about this. But basically what you do is you categorize the building. You basically take the entire building and you say, this little bit is 5 years. This little bit is 7 years. This little bit is 15, and everything else is 27 and a half.
Correct.
What that allows you to do is over time, if the numbers are big enough, those little increments are helpful.
Super helpful.
Super helpful. And then what you have with the bonus depreciation is you had a short window, which was 2021 and 2022, actually started in 18. So from 2018 until 2022 is the last full year. You can take 100% of the 5-year bucket and the 7-year bucket and slam that in. So folks, there's a playlist on my channel where I talked about a duplex with cost segregation, where I was basically able to pull forward about $25,000 in depreciation, which allowed me to save personally about $15,000 or $12,000 in actual cash. The big boys like Grant Cardone, this is how Grant Cardone can make millions of dollars and not pay the IRS anything, because he is slamming bonus depreciation of $1 million, $2 million. That's why he can brag about not paying the IRS, because he bought so much and depreciated all. That's why I am not selling anything this year. Everything I buy is going to have a cost seg and bonus depreciation, because I don't like writing a 6-figure check. That's not a good day. But
no,
it happened. I didn't have enough write-offs. I should have kept everything. That was my mistake.
Michael, and I'm going to touch on that, guys, since we're talking about taxes right now. You're doing all of this. You're making your money. You're trying to remember. Everybody says, "Hey, you go make a bunch of money." Cool. But what people don't say is keep more money.
Yes.
Because if you keep more money, that's the name of the game. I'd rather find avenues to not pay Uncle Sam so much, and defer it if you're going to 1031 exchange it or whatever the case. But that's the whole goal. And right now, Michael said something, and you guys, I want everybody to pick up on this. He said he wished he would have kept more property. Okay, there comes a time that if you keep too much, you're going to shoot yourself in both feet.
Yeah.
Okay, because you want to keep it all, and I'm out of experience. We kept a lot of properties, and what it does, it like smashes your cash flow. Like you will remove yourself from the ability to go buy more.
Yeah,
okay? Because
it doesn't smash your cash flow. It smashes your
capital.
Your liquidity.
Yes.
Yeah.
Sorry, that's what I meant. Not cash flow. It increases your cash flow because you got more rentals.
Right.
But
your
liquidity,
flexibility, your ability to take on more deals. Yeah. You have to have that balancing act. Absolutely.
Yep. And it does do something, because I've never done cost seg. We did it this last year for 2021, and man, it saved me $690,000 in real money.
Oh, is that all? Damn.
That's That means I have a carryover.
I
I'll
know.
have a carryover. And I think about this, that if it's millions of dollars that you have a carryover because of cost seg,
Yeah.
it's like, it's a no-brainer. It's like, go work, go make some money. And then at the end of the year, it's zero because you don't have to pay taxes because you're carryover.
Yeah. If you're
I mean,
if you're a real estate professional and you're buying and holding anything, you're a fool not to do this. You're just a fool.
and so many people don't do it, Michael.
That's
It's
crazy.
returned. It's
Yeah.
fucking retarded. Sorry.
Yeah.
I owe you like $5.
Yeah. $5 or $6
dropping bombs and stuff. Yeah.
Yeah. So folks, Omar and I have a, David Wiener is his name, cost segregation. I have his email and whatnot. I'll try to put it in the show notes before. It's again, if you're a real estate professional, there really is no sense for you not to do this. If you're a full-time employee, make a lot of money, talk to your CPA because maybe it's not worth the cost because carryover or not. But again, it's worth a discussion. Ask your CPA about it. You're now after tax day, so now accountants have more time. You're not going to get any other time in March and early April. But have some planning. I'm already talking to my guy about 2022, and he's like, Michael, if you're going to buy 5 to 7 properties, and you can, and to Omar's point, you have the liquidity to do that. It doesn't hurt. He's like, Michael, why did you sell those? I know what you have. Why? He asked me, why did you sell those? I'm like, I'm an idiot. I mean, what do you want me to tell you? I mean, I made a mistake. So yeah, don't do that. Don't do that.
Have a ratio. Like, I mean, I even called up Michael one day and I'm like, hey, what should I do here? I got this. And he's like, okay, if you're going to do this, like flip 2 or 3, keep 1.
Yeah. Yeah.
You know,
You
so
know,
you can increase it.
I was buy and hold forever for so long. And then I got into the flipping thing and flipped everything. I need to smash those two together. Yeah.
You know what, Michael? It's so true. I mean, this is the easiest way to increase your capital. Plus, you're able to hold more. But then you have to like you got to play with it perfectly because it's interesting. It definitely is.
I will freely admit that I made horrible mistakes. I sold 6 properties last year. In reality, I should have kept 4. I could have kept all 6. It would not have changed my life 1 iota, but I didn't. And I've learned my lesson, and I will be using cost seg and bonus depreciation throughout 2022. And Omar, I want to thank you for bringing me David and cost seg. It's been very helpful.
Hell yeah. You're welcome. Thanks, Michael.
Where can people follow you?
Guys, go to my IG at Omar_Alfaro or OmarAlfaro.com.
Thanks, buddy. I appreciate it.
All right. You're welcome. Thank you.